Happy Monday. Donnie Baker here with the LPR Sound Foundation. Today, we're going to discuss the difference between a DBA, a doing business as, or in some states, it might be called a fictitious business name statement, and an LLC S Corp kind of vibe. Okay? So how you structure your business matters. Okay? So let's jump right in. So look, the simplicity of it is that a DBA is just you making money as you. It's you doing work as you. It's just you or you. That's it. So an LLC is a separate entity. It's like another person. It's like now you work for the other person. You work for the LLC. You are now an employee. Okay, so that's the major differences in it. Now, I should start off by letting you know that I am not an accountant. I'm not a CPA. I'm not a tax attorney. If you have other questions about these kind of things, please consult a professional. Okay, I've done it this way for 30 years, and it's worked for me. And now I'm just sharing the information with you. Okay, so let's dive in. A DBA. I myself I'm a doing business as. I'm a DBA. Now I am located in California in the United States. These laws I'm not really sure of the laws outside of the United States. So if you're outside of the United States, I'm not sure. You'll need to check with your local entities, your federal and locals, okay? If you're in a different state, if you're not in California, please check with your state. You're gonna have different tax rates for your state. The federal tax rate is the federal tax rate. So you're gonna have different, you may have different state tax, if you have any tax at all. There are some states that don't have personal income tax, such as Nevada, okay? So, that being said, as a doing business as a DBA, it's just, like I said a few minutes ago, it's just you doing business as you, okay? The biggest difference, and I guess the easiest difference to think about, is that an LLC is otherwise known as a limited liability company. It can also be a sole proprietor, meaning it's just you, but it limits your liability if you were in fact to get sued, okay? If your company were to get sued. So, as a doing business as, if you get sued, let's say somebody hurts themselves on one of your jobs, they can sue you, okay? If you are an LLC and the same person gets hurt on one of your jobs, they sue the LLC, they sue the company, not you personally. So your personal assets are protected. That's the major difference. Another big difference is when it comes to tax time. As a corporate, an S Corp or an LLC, you have to file your taxes quarterly. You have to estimate your income and pay income tax quarterly. That means every 3 months, okay? Every quarter you have to send money in. Now, at the end of the year, if you've overpaid your taxes, you'll get a refund. If you have underpaid your taxes, you will owe at the end of the year. Now, all of these can be done even though you have a regular 9 to 5, even though you're a W-2 employee. So at the end of the year, you get a W-2 from your employer. They've taken taxes out the entire year, and you file your taxes, and you either get a refund. Again, you either get a refund if you overpaid, or you have to pay if you have not paid enough on a W-2. So, same thing can happen with an LLC. As an LLC, you need to set yourself up. You need to set you up as an employee. We're going to look at a graph here in a minute, and it explains kind of the tax rates. Now, part of this graph, the way this graph is put together, is that if you don't make more than $50,000 per year as your side hustle or as your business, I would just stay as a doing business as. It doesn't make sense to have the added expense of an LLC if you're making less than 50 grand, okay? If you're making less than 50K a year, just stay a DBA until you start making more money. Then you can migrate into an LLC or an S Corp. Okay, and you'll see the tax benefits of it in a minute. Because either way, you're going to pay self-employment tax, which covers your federal income tax and your Social Security and your Medicare, things like that. Okay, as a self-employed person, a self-employed entity, whether you're an LLC or a doing business as, just a sole proprietor, you're going to have to pay your self-employment tax. Okay, so again, not a tax professional. I've just done it this way pretty much my entire career, and it's been okay for the most part, until I learned how to do these things You know, it took me a minute to figure this stuff out. You know, we're all dumb kids at one point. You know what I mean? And you know, my early 20s, man, I made some mistakes, but I figured it out. And along the way, I did my research and I figured this out. So since then, this is the way we've done it. You know, and every year it seems to run smooth. We use TurboTax for our taxes, Intuit. We also use QuickBooks for our bookkeeping, our daily bookkeeping here at our business. And, you know, and so those two things work really well together. The reports, you know, go one into the other, and it makes tax time really simple, you know. So yeah, it works out. So, but again, you need to look at your personal, you know, how things are in your world. I can't really tell you. You know, this is something that you have to look at for yourself. If you own a lot of property, if you own a house and a car and a boat and an airplane and, you know, whatever, you may own multiple homes, multiple cars. You might want to protect yourself as with an LLC. And this is just simple protection that the LLC is a separate entity. It's like another person. You know, that person will get sued and not you being sued because you're simply an employee of that person, you know? So let's look at this graph. Now, this graph is going to let us know, I'm using the California tax rate as well as the federal tax rate, okay? So if we look at this graph, I've got it right here, okay? So let's look at the DBA sole proprietor here on the left. Let's say we have an annual profit of $50,000, okay? This is income minus expenses. I made it really simple. You may have more expenses than this. You may have less expenses than this. Let's say you made $60K gross pay, and then it cost you $10,000. So let's say you had an annual profit, the money left over after expenses of $50K. Okay, the federal tax bracket is gonna, let's say you're filing jointly, you're married filing jointly. Okay, that's what we're gonna use. All right, so 12% of 50 is $6,000. Now on top of that, you're gonna have your self-employment tax of the federal self-employment tax is 15.3%. So that's another $76.50. So your total federal tax on making $50,000 a year as a DBA is $13,650. Like I said earlier, if you're making more than 50, which we made 60, we're going to look at being an LLC. $50,000 profit, you got $60,000 and then it cost you $10,000. So you're going to pay yourself $25,000. Now, this puts you in another tax bracket, okay? You're still married filing jointly. Now you're doing a W-2. Okay, so we still got the $60,000. We're gonna get expenses are $10,000. Okay, you're gonna pay yourself $25,000. Now the salary is gonna be taxed at 27.3, which is 12% plus the 15.3, which is 27.3. So your total tax bill is $68.25. So you only paid yourself $25,000. So your employment tax is $25,000 at 12%, and it's only $3,000. So your total federal tax bill is now $98.25. You're saving $3,825. Okay, so this is how it works. You as an LLC, yeah, you get a better tax break, but again, keep in mind that the in California, I don't know how it is in your state. You can check, but in California, to be an LLC, the corporate tax fees are $800 a year, and those are not tax deductible. So you need to check into your local. Your city may have it, your county may have an added tax rate, your state, you need to look into it, okay? But here in California, the tax rate is $800. To be an LLC, the corporate fee is $800. Okay, so that might be something to look into as well. Like I said, man, if you're not making more than 50, it may not be worth it to have an LLC. I know it sounds really cool to have the LLC after your name, but prestige doesn't really, it's not really worth it. You know, if you're just starting out as an audio engineer, music producer, I would suggest just doing it as a DBA. You know, open a bank account with your DBA name, with your production company name. A suggestion here in California, especially, is to have the word productions in the name of your company. Like if you're doing a music production company, have the name Productions in that name, so that when you go to the bank and you open up Billy Bob Productions, there you go. So now you have an account with Billy Bob Productions, okay? Have the word Productions in there because, like I said earlier, you're going to save that 5% when you buy things for your company because of the sales tax incentive in California. I'm going to put a couple links below in the description LegalZoom.com is a great place to register your business, whether you're registering as an LLC, a DBA, what have you. SignatureFiling.com is another one. I would suggest also, when you file your business structure at either LegalZoom or Signature Filing, also go ahead and file for an EIN. It's technically an employee identification number. As an LLC, you're going to want that anyway. And then what this does is it keeps you from using your personal social security number on forms, things like that. You use your EIN, and then the only people that know it's you is the IRS. Okay? So definitely file for that. I think it costs an extra $50, whatever. So with that being said, I'm going to keep this one really short today. If you do have any questions, comments, or concerns, reach out to me via email. It's info@learnprorecording.com. I'm pretty good about answering. You can leave a comment down below on YouTube, or you can email me, info@learnprorecording.com. I do have something I want to give you for free. This is the Studio Growth Formula. Go to learnprorecording.com/Studio Growth Formula. It's just a quick PDF that it guides you through, and it basically tells you what I've been telling you in this podcast. It's got the links in there as well. So it's a lot of good information in there, and it's free. Just go grab it. Again, that's learnprorecording.com/Studio Growth Formula. I appreciate you guys hanging out. We will see you Wednesday on the blog post. I won't see. Oh, yeah. I'll do the blog post. It's okay. I'll see you Wednesday on the blog post. I'll see you Wednesday on the blog post. I'll see you Friday. No, we're not doing Friday this week. Friday's been canceled this week. No more Fridays. I'm kidding. Last Friday was our last Friday of the year. We're moving into 2025 right now. So we will see you in 2025 with, we got one more podcast before the end of the year where we're going to talk about some tools and tips to help you stay organized in your business going forward into 2025. Plus, I'm going to give you some tips to kind of kick things off and get you motivated to move into 2025 with a brand new outlook on building my business, building this, building that. Let's go. So I appreciate you hanging out. We will see you guys next time. My name is Donnie Baker, and I am out of here.